You're all probably wondering what the dickens is the Chicago waterfront pathway all about. Quick little thing. This is my company, Live Free Financial. So yes, I am Matt Yesmaniski. I have had a real estate investing company now since 2014. All right. So this whole slide was basically brought together through that corporation, but we're using it because it's a great tool, in my opinion. So yeah, nothing. We don't have to go through anything there. So anyways, we'll get started. Disclaimer. Okay, everybody's got to do it nowadays. This is not financial advice. This is just financial education tonight, okay? If you are interested in any of these investments, number one, you can always connect with the certified financial planner, or you know what, come into the office with us and we'd love to chit chat and make strategy for real estate investing. Other than that, it's just for educational purposes tonight, okay, guys? So we'll start off with a video here. These are clients of mine, and I'll get that started here.
My name's Corbin. My wife Shara and I have been investing in real estate since 2018.
We were just trying to find ways to make our money work for us, thinking about retirement, long-term investing.
Once Mason was born, our first child, fatherhood just really hit me. So when I looked at the real estate, it was able to, I think, financially help us out.
We were pretty green on it, but we had a great realtor who led us in the right direction anyways.
Oops, what happened there?
Yeah, being connected with Matt, getting to learn more through him and about him. He's experienced all this, he's done all this.
We just felt like he had a lot to offer, as far as knowledge and resources, and we were just on the same mindset for a lot of things, so we just felt that we clicked well, and yeah, we were able to grow kind of a relationship from there. So at first there is a lot unknown, and it can be stressful, but we learned that even if the house stays, empty for like a couple months or so, people are always looking for places to live. You eventually will have it rented.
Right now, real estate provides a bit of a comfort blanket too. Each month, when your property is rented out, cash flow is going to be coming in, your mortgage is getting paid down, and in years to come, you have the option to refinance and pull out your mortgage. And all three of those things are going to be tax-free if you don't sell it. It's going to free up my time to be able to be with the family, to be able to do what we want to do. That's why we chose real estate investing. It's time, it's being present, it's being in the moment, and just being a present dad with my children.
Awesome. So, yeah, those folks, they're good friends of ours now, and they originally contacted me off of a listing that they were totally never invested before, open to new ideas, and we built relationship essentially business-wise, and just kind of helped them make decisions, and so far I think they're up to about 4 or 5 doors now within 2 years or less, and yeah. Anyways, there's kind of a story. So real estate investing, it's not. It's definitely not a get-rich-quick scheme, essentially. It definitely is a great vehicle for building wealth over the long run, okay? And tonight we're going to go through a strategy of just long-term real estate wealth creation. You'll see a bunch of strategies there where you can actually, make an income and some profits quicker than the long-term method. But tonight is more like, what's the safest and most secure way of creating wealth that'll last generations? So keep that in mind tonight, guys. Couple quotes here. Obviously, Rich Dad, Poor Dad, Robert Kiyosaki. Real estate investing, even on a very small scale, remains a tried and true means of building an individual's wealth and cash flow. Okay. So a little bit about myself. Everybody, I'm a realtor in town. I've been an entrepreneur, investor. I like to live out what I preach. I have a family that lives here. I was born and raised in Calgary, moved here when I was 17. I played hockey most of my life. That's what brought me up to Grande Prairie. I met my lovely wife here. And yeah, I love learning and connecting with people and continuing to grow and become a better person. And yeah, at this point, we're just over about 5 million in real estate and growing in our area here. So real estate. So a lot of the reason why you're here tonight is, number one, I love to inspire people. I love the quote where it says, when you change your thinking, you change your actions. Okay. And then when you change your actions, you change your future. I read it in one of the real estate books, is change your actions, you change your results. And if you apply that in all areas of your life, it doesn't matter what facet, you will see different results. Okay. I love reading. I love my animals. We got a bunch of horses and we got ponies. My family there right in the middle. That's my wife, Tanya. My big boy, Anakin, he's 9 now. Lydia is on the right there. And Daenerys, she's right in the middle. And our little wild Gaga, I'm hanging on to her because you always have to. She's kind of a wild one. She's the comedian of the family at this point. But so, yeah, that's a little bit of breakdown of myself. I guess I've had a sports car. Now I sold that not too long ago before the gas prices jumped up. So I don't know if I'm happy about that or not. I'm still a little bit sad. So yeah, we'll move forward here. So on the journey of real estate investing, okay, we're gonna start with developing a mindset. Okay, so if you have that worksheet in front of you, the worksheet's going to help you understand where we're headed here tonight. Okay, so one of the quotes tonight, is, do not conform to the pattern of this world, but be transformed by the renewing of your mind. And it's interesting because what it really means is you got to control the thoughts that you are starting to believe on a day-to-day basis. Okay, and it's interesting because I run into a lot of folks on a daily basis that are like, you have all of the information in front of you. You have everything that you need to become successful. Okay. And what it all boils down to is just making that one decision. Okay. And it's interesting because, you want to forbid thoughts of failure and defeat in your mind. Okay. And the more you can shape your mind and like it says, commit to a growth mindset, the more successful you will become. And don't beat yourself up if you're not there today, because like I said, it's a journey. Okay. And then I like the quote here, whatever your mind can conceive and believe, it can achieve. And that was by Napoleon Hill. Okay. So again, if you just joined, we got a Google link drive thing there. In there's a couple worksheets for following along and taking notes if you're a note taker. But yeah, welcome. And so yeah, we're just going to keep going. If you have questions, feel free to ask. We're here to answer any questions that you may have. So where we left off here is this next slide. Yeah, 90% of millionaires become so through owning real estate. Okay, Andrew Carnegie said that. Still believe it. So the next slide that we're going to get into is Rich Dad Poor Dad. Robert Kiyosaki, in his book, if anybody hasn't read it, I would highly recommend. It's a good read. You could probably YouTube it nowadays too. He'll probably really explain this well, better than I. But I'm just trying to get a basis again. If you are following along here, we're shaping where you are and where you want to be as a real estate investor. Okay, so and on this slide, it doesn't matter where you are. Nothing's right or wrong here. Okay, or good or bad. But so to dive into it, as you're filling in the sheet, the E stands for employee. Okay, So when you're an employee on the left side of the quadrant, you are trading your time for money. Okay, so every 2 weeks you're getting that paycheck, typically working for a system. And this is where 95% of the population fall on. When I shared my story at the seminar, basically when I was 18, I was working for a landscape company in town, and I was a hard worker and this, that, and the other thing, and thought I could do it on my own. So I said, you know what, I'm gonna start my own business, and I ended up starting my own landscape company, and ended up just thinking that I was God's gift to the world. No, I'm just kidding. But I became self-employed. Okay, and when you become self-employed, you end up, trading a little more time for maybe a little bit more money. It all depends. But without you working, you're not earning an income. Okay, that's what you're trying to get on this side of the quadrant here. Okay, so the long-term retirement plan on this side is 45 years. Right? You want to start working at 20, retire by 65, and then you can live out your golden years. Okay. But the beauty about getting into the real estate side is it makes you an investor. Okay. And above that is a business owner. This is a business owner that leverages a system like a McDonald's or something that's there, that if they're gone, the business is still running, okay, and making money, and hopefully when you come back, it's made more money while you're gone. And this is where about 5% of the population are operating in. Okay, so we're trying to open your eyes to the fact that buying real estate can bring you over to this I side, okay, where you have your money working for you on a passive level. And at that point, depending on how you're able to scale it, your retirement, could be anywhere from 2 to 5 years, depending on how fast you want to grow based on your goals, right? So I know I didn't explain that 100% bang on, but the basis is there. So if you have questions about it, feel free to ask, okay? And you can ask questions in the chat, or if you want to ask via mic. All right, so diving into it here, advantages of owning real estate. Okay, so number one advantage of owning real estate is there's some tax advantages to it. Okay, so when you just pick up any property, it doesn't really matter, just a single family house wherever, you treat it as a business. Okay, so there's expenses there. You can write off a portion of your home as an office. You can write off some vehicle expenses because you're running around, you're showing the property, you're actively working for making money with that dwelling. Okay, so and all the tax advantages, I don't get into it here because I leave that to the accountant team. But yeah, so keep any questions for that. We can always get those answered by our accountants. The beauty about owning real estate is you get to make the decisions. You own property. So the way you want to operate it, the way you want it to look, do you want to sell it? Do you want to keep it? All those kind of decisions, okay? A huge and powerful tool when owning real estate is mortgage pay down. A lot of people don't talk about it. They're always thinking about how much is that cash flowing every month. But when you have a tenant in a rental property, and if they're in that property for 25 years, and let's say that's a $200,000 property, well, over 25 years, they're paying off $200,000, assuming there's no appreciation within the 25 years, which we all know is probably not going to happen. So mortgage pay down is a huge tool. Another major thing is leverage. Real estate can be leveraged in many ways. And we'll talk about some leverage tonight in this slide. And, 5, some passive income. It's always nice to have a little bit of passive income at the end of the month. You can save up for trips. It's just positive cash flow after expenses coming into your bank account every month. Super powerful. So, any questions on that one? Pretty straightforward, hey? All right. So strategies, real estate strategies. So after I did this list, I was like, oh no, I missed quite a bit, because there are a lot of ways to make money in real estate. But tonight we're going to talk about buying and holding. Renovations can also be categorized into sweat equity. Okay. The BRRRR, that's such a popular strategy out there nowadays. It stands for buying a property, renovating a property, and then refinancing the property. Okay. A very powerful strategy. New construction. Okay, you can always build new houses or new dwellings, you name it. Commercial, there's lots of commercial investment strategies out there. Land development and subdividing, okay? And a lot of all of these strategies, if not yet, and more, I personally have done. So I can attest to any of these strategies. JV, that means joint venture, okay? JV, and those are powerful as well. It's a great way to get started if you are missing, if you're missing something, if you have money but you can't get a mortgage, or if you can get a mortgage but you don't have the money, or it depends what each partner brings to the table. Tonight, actually, we'll talk about how I did that. AFS is an assignment for sale, basically just tying up a property, living in it. So right now, let's say if there was a private deal on the market and you were able to tie up a property at $300,000, and let's say in 6 months' time, you were able to find a buyer for it for $360. You just basically, you tie up a property for a certain period, and then you ended up wholesaling it, which is kind of underneath that. So, another great strategy if you're just getting started, okay, and need some cash and some experience. Rent to owns, those are always an option as well. And then, I got to add Airbnbs to this, fully furnished rentals. I got to add that to this because that's getting more and more popular, especially in Grande Prairie, now that there's a lot of people coming here for work and such. Another one is, if you have capital and you want to put it to work in real estate, you can always just be a capital silent partner, okay? I personally have some silent capital partners. They don't want to deal with anything. They trust me. We put the money to work in the market and we give them a very healthy and safe, secure return, okay? And I love this bottom quote here by Henry. Strategy is not the consequence of planning, but the opposite. It's the starting point. So the beauty of strategy, guys, is that you get to pick the strategy, okay? And nobody else. So I always say, when you're developing your goals, and whether you're developing your goals with us and our team or whomever, you always want to start with something you're more comfortable with, okay? Because then you're going to build off that. And not one strategy is better than the other, in my opinion. Just getting into the game, I was thinking about that today. Just getting into the game is huge. Because, with the way the market is too right now, it's like everybody now in a year from now is going to be like, oh, I wish I bought. And it happens all the time. And it's funny because a lot of the last several years, Grande Prairie's been just a plateau. but it's just like, okay, we'll just keep buying. We keep buying because we're buying for cash flow and long term. But then all of a sudden, the market like now it picks up. Well, yeah, now I guess you could take advantage and you could cash out and maybe re-strategize and do something else with that. So keep that in mind too. You're never locked in, because remember the advantages of it is you're the boss. Okay. So before we dive into a success story, I figured I'd give you and talk about the elephant in the room, because we've all heard about it, that 4 a.m. phone call where the toilet is leaking and a tenant's left and trashed the property and you need bins ordered just to clean the place up. These are the realities of owning real estate. Okay, it's for us not to talk about it, I think would be naive. We just need to get, like I said, we need to get in that mindset that, you know what, this is of value. There's going to be some challenges. You know what, how are we gonna handle these challenges as we continue to build? Okay. So losing money definitely could happen. Does it happen? I guess I've lost money. There's been times where we've had tenants move out, will not pay rent, and then they trash the place for over $10,000 worth, right? But again, this is a tried and true long-term wealth creation plan, okay? So you can't let the emotions, like at the beginning, we got to get that mindset, right? Collecting rents, not collecting them, going to court, yep, that's all part of it. Going bankrupt, well, I sure hope not. I hope you can partner with the right people and so that you mitigate that risk, okay? And at the bottom there, you mitigate your risk by building a strong team. Any questions there? Now that everybody logged off, they're scared. Nah, I'm just kidding. All right, let's get into it. So this right here was one of our first deals in Grande Prairie, Alberta. This property, you can drive by it today in Grande Prairie. We joint ventured with one of our partners on this property. We found it, we sourced it. What they brought to the table was they were getting the mortgage. We were putting in 50% of the cash, and then we were managing it. That was our duty, is to manage it. So we were able to buy the whole unit side by side for $368,000, which in today's market is a good price. I think it's about $184,000 a door, give or take. So our down payment required on that purchase was $73,000. Closing costs or the lawyer fees was $1,200. We did a property inspection. Before we rented it out, we did some paint and repair for about $3,000, and a staying power means the money we had in the bank account, that the operating account of that, is we just had some extra cash in there just to cover, I believe it was 1 month's rent. So our total investment on this property was $80,000. Okay. Everybody can hear me still? Beautiful. All right. Cool. So $80,000 we invested. So what we ended up doing, this is a breakdown of the expenses. Okay. So we had a first mortgage of $294,000 at a 3.29% interest. You can probably get a much more aggressive interest rate in today's marketplace, probably around the 2s. The amortization, I believe, is still 30, with investment property putting 20% down. Mortgage payment was $1,255. Property taxes $418. Insurance on the dwelling was $162.34. So our total monthly expenses were $1,836 a month. Okay. So how did this property perform? So we rented each side for $15.87 a unit plus utilities. So our total monthly rent was $31.75. The monthly expenses, like we just went through, were $1836.34. So our total cash flow every month was about $1338.66. Okay, so to get your cash flow every month, it's calculated by the monthly rent and subtracting the expenses. Pretty simple. And that is something you can fill out there in the notes, I see. So to break this down on a cash-on-cash return for an annual rate, if you take that cash flow and you times it by 12, you're left with your annual cash flow of that property. So that property cash flow about $16,000 a year, and then you divide it by the amount that you invested. And in this case, it gave us about a 20% return cash on cash. Okay. Now remember, cash on cash, that cash flow is the net income that property is creating. Okay. So this is, in my opinion, this is a really good deal. Anything you can get 20% cash on cash, I would consider investing in. That's just my formula. People have bought for less. So if we take, now we want to dive in and see how this property performed as a whole, okay? And again, in this situation, and it's kind of the situation we're facing now in today's market, I never calculate appreciation into my calculations while I'm assessing a purchase. If it happens while we own property, great, okay? But again, I always want to make sure when I'm assessing a buy that it's cash flowing the day I buy it, okay? Because there's no point in doing it any other way. You'll get yourself in a lot of trouble. So we figured out that the cash flow over 2 years created $32,000 return. Okay, that's what that CF means. MP is mortgage paydown. Okay, so over 2 years, there was a total of $14,272.16 paid down. Okay, and you know we bought it well, and the market did an uptick slightly, and we ended up about $72,000 in appreciation. Okay, so our total return, if you add all those numbers, was about $118,000. Okay, so if you take that return and you divide it by the invested capital of $80,000, okay, you're left with about 148% return in 2 years. So I like those returns. I'm sure, I don't know if any of you would sign up for that. Maybe, yeah, no, I don't know. Anybody like that return? So again, the mortgage paydown is the balance of the current mortgage being paid off every month, okay, if you're looking at the notes. And appreciation is where the property has increased in value due to market conditions or other factors. Yes, right? Heck yeah. I sign me up all day too. You know, there's times where I look at other opportunities out there, and at the end of the day, I enjoy real estate, and I enjoy these results. So they're very tried and true. So what did we do at this point? At this point, I was like, hey, I talked to my joint venture partners. I was like, you know what? Property's performing very well. We have equity, and why don't we talk to the bank about doing a HELOC? Okay, so after 2 years, we were able to go to the bank. They appraised the units at $220 per side, so a total of $440,000. Okay, so what they ended up doing was giving us a HELOC, which stands for a home equity line of credit. Okay, in some cases, the bank won't give you that; they'll just give you the equity as another mortgage on that property, which is just as fine as long as you put that money to good use and don't go buy boats and cars and stuff like that. But I mean, nothing against nice cars. I love a nice car. Okay. boats. I don't know if boats are really worth it having here. I'm sure somebody would disagree, but I mean, if we were in the Okanagan, maybe a little different. Yes, the MP include the original 20% down. So the mortgage pay down, yeah, you would be the mortgage pay down. So you put down your 20% on the dwelling, and then there was a $14,000 paid down off that 294, if I'm not mistaken. So let's go back a couple slides here. So yeah, you had $294,000 mortgage up front because you put down $73,000 for this building. So then in 2 years, there was $14,000 less off of this 294, and then the property was then worth $440. Okay, that's where I'm getting that appreciation. And again, like I emphasized, do not invest for appreciation, mainly because it's speculative. Okay, you want to invest based off of the monthly expenses and what you can get for rent today. Okay, so you want to make sure that that property, after you buy it today, is cash flowing. Okay, the appreciation is gravy. Yeah, HELOC, yeah, exactly. When we talked about the advantages of owning real estate, HELOC is an advantage. And yeah, I would call it leverage for sure. Yep. Because the beauty of that is you still keep the asset. So you're leveraging that asset to acquire, in this case, Mo, in this case, we used that money now that we were able to get out of the HELOC, and then we bought 2 more doors. Okay, so then at the bottom of the screen there, we had 4 doors based on the original investment. Okay, so we scaled it. It's a good question. Very good question. So yeah, hopefully that all makes sense. Pretty straightforward. So we'll dive into this last little bit here. I love this quote, if everyone is moving forward together, then success takes care of itself. So this goes back to that, the misconceptions, right? We were talking about how we mitigate risk in real estate investing, and it is by building a strong team. Okay, so by doing that, we're on this slide here. You know, this is your team, but not limited to. Okay, you want a mortgage broker, a banker, a realtor, or realtors, lawyers, appraisers, property managers, accountants, insurance brokers, certified financial planner, because maybe you already have one that you know you have money. They're managing your money, and maybe you're at a point where you can take some liquidity and put it into the real estate market. So yeah, and contractors are huge. And again, everything's going to be dependent on your strategy as well, right? As you start, your team's going to be different than as you continue, and it might get bigger, might get smaller, depending on these strategies that you go after. So. All right. So yeah, we're pretty much done. I flew through this time. So it brings it back to the last sheet here, establishing your why. And basically, if you don't have a strong enough reason to do something, like I said in that video, you're just not going to do it. Okay. So what I say is, you know what? Sit down, dream about where it is you want to go. What is your life? What would your ideal life be? And you know, break it down this way. Like, what would an additional $500 a month of positive cash flow coming into your bank account look like? Okay. And then, you know what? Try $1,000. Okay. What about $5,000 additional? How can you make it so that this investment vehicle can maybe supplement your wife's income, right? If she works, I don't know if she's working, but I'm just giving you an example. How can you do that so that now you have this vehicle? Now your wife can be at home with the kids, or yourself. I don't know. Or is it, you know what? I want that additional income because I want to drive that fancy car. That's what we did. That's what I did. I had a rental property. I bought it, and then I went and bought a sports car with it. Okay, with the cash flow, it was paying for the car. So, yeah, and Brian Tracy says it good. A goal without a plan is only a dream. Okay, and always remember, your focus determines your reality. All right? So yeah, I appreciate you all being here. I hope that you got something out of tonight.